This is your LMAX exchange technical update for Monday, October 9th, 2017. Euro dollar. So the euro remains pressure to the downside right now as the market continues to correct out from that plus 2.5-year high from back in early September at 120.93. Right now the focus is on a clear break below the August low at 116.63, and for the market to drop down towards the head and shoulders top objective that comes in at 115.55. At this point, only a break back above 118.33, the high going back to the 29th of September, would take the immediate pressure off the downside. Sterling dollar. So cable is broken down towards this major psychological barrier at 130 over the past several sessions, but remember, this is the breakdown from a recent 2017 high, and so the setbacks are classified as corrective despite the intense setbacks, and the market should now be very well supported around the 130 area in favor of the next major upside extension towards a retest and break of that 2017 high up around 136.60 and towards 140 further up, only back below some support which comes in around 127.75. That previous breakout level from earlier in 2017 would negate the immediate uptrend right now in sterling dollar. Dollar yen. So dollar yen has been chopping around for the most part. We've seen a nice rebound out from the recent 2017 low in the 107s, but overall this is a market that remains confined to a range trade in 2017, and so any rallies that we do see from here up towards the 114 area should be very well capped ahead of what could be another reversal to the downside back towards that 2017 low at 107.32. Euro Swiss. So Euro Swiss has been trading sideways, not doing much of anything of late, but overall here in 2017 we've seen a structural shift favoring the top side following breaks above 110 and 112, and so look for the market now to trade back towards that critical barrier at 120 further up, and that will be confirmed on a break above the recent 2017 high at 116.24. Only back below 112 at this point would compromise this outlook. Aussie dollar. So Aussie is broken down below some key support at 78, and that breakdown now exposes deeper setbacks in this market towards 75 over the coming sessions. Any rallies here should ideally be well capped below 80, with only a break back above that psychological barrier to put the pressure back on the top side. Dollar CAD. So dollar CAD has seen a nice correction out from its plus 2-year low down just shy of 120, and there is room for this correction to still extend up towards a retest of some key resistance in the form of that high that was seen back in August at 127.80. At this point, look for setbacks to be well supported with only a breakdown back below 123 to put the pressure back on the downside. Kiwi dollar. So the New Zealand dollar continues to show signs of topping out in 2017 off that plus 2-year high above 75. The market has most recently broken back down below 71.32. That was a key low that was in place from the 31st of August, and this does open the door for the possibility of a drop all the way back down towards the 2017 low going back to the month of May, which comes in at 68.18. SPX 500. The S&P 500 has pushed to another record high in the previous week, and the market seems to be intent on continuing to extend this parabolic run that has shown no signs of let up over the past several years. At this point, we would need to see a breakdown below 24.87, that's the low, going back to the 25th of September to take the immediate pressure off the top side. Gold. So gold has seen some intense setbacks in recent months, but those intense setbacks have been very well supported for higher highs. Most recent higher high coming in the form of a 2017 high up around 13.57. And so look for this latest pullback to be once again well supported, ideally ahead of 12.50 in favor of that next major upside extension to a fresh 2017 high and towards the 2016 peak at 13.75.